Investors are always looking for clues as to what the Federal Reserve might do next. But at the last meeting of policymakers, some expressed concern that market expectations may be out of whack with what central bankers plan to deliver. Ylan Mui has more.
The minutes of the Federal Reserve's latest meeting show division not just over the September rate cut, but over how to talk about the path of policy going forward. During the meeting, a few officials argued that the market appears to be factoring in more Fed rate cuts than they believe is appropriate. These officials said it could become necessary for the committee to, quote, seek a better alignment of market expectations and policymaker expectations. In addition, several participants urged Fed Chairman Jay Powell to provide more clarity about when this period of recalibration could come to an end. Now, Powell has pointed a couple of times, including during his speech this week, to the late 1990s, when the Fed cut rates multiple times at consecutive meetings, but not for an extended period of time. He's called that experience successful, but said that policy is not on a preset course. Now, on the other hand, a couple of officials have argued for a bigger rate cut of 50 basis points, possibly accompanied by forward guidance that they believe could prevent the U.S. economy from slipping into stagnation. Now, throughout the meeting, there were references to trade tensions and a sort of gnawing concern that the uncertainty that's weighing on business investment and manufacturing could translate into a slowdown in hiring and ultimately hit the consumer. Finally, on the volatility in overnight funding markets, there were staff presentations and official discussion and a broad agreement that there needs to be a decision about the appropriate level of reserves. For Nightly Business Report, I'm Ylan Mui in Washington.